Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Wednesday, August 25th, 2010. This morning I'm talking about here we go again. Yesterday, Standard & Poor's downgraded Ireland's sovereign debt, which sent bond yields higher for Ireland. But we've got the euros actually higher this morning, okay, because German business confidence figures came in better than expected and are at the highest levels they've been since 2007. What we're looking at here on the chart is we're looking at a daily chart of Euro USD. And as you can see, had a nice run up. Now we've been pulling back, and we're sitting right above the 50% retracement level, just above 126. So that looks like it's going to put in some near-term support, and we'll see if the euro can hang on there. Okay, but this morning in the U.S., we had durable goods orders come in, and they came in worse than expected. Now this follows yesterday's dismal existing home sales figures, and shows signs that the U.S. economy is maybe floundering. Now this has caused talk of further Fed quantitative easing to heat up, and also people calling for more stimulus from the government. Okay, just want to take a look here real quick at dollar yen. You can see that the yen's been very strong going into this, and it looks like we're sitting just about below 84. Now, the official jawboning in Japan has begun as the Prime Minister Noda, he came out and said he's prepared to take appropriate action to combat what he calls one-sided currency fluctuations. So, you know, he looks at the chart and he sees that the yen's been strengthening, and to him this is one-sided. So, you know, they're talking about the intervention, and you know, if this could happen, starting the rhetoric. Now, I spoke yesterday about the actual possibility of this taking place, and we're going to have to see how it plays out. I think you know, the market's ready to test this guy's fortitude, and we're going to see what happens. So right now we've got stock markets lower. We're in a little bit of a risk aversion mode. We do have Aussie though is well, it was showing some strength versus the yen. Let's look at this on the 5-minute. We can just see here that the Aussie flipped around. Now it's selling off. So we've got risk aversion going on. We've got oil prices lower to roughly 71.5. You can see USD CAD here, and we're still under that 107 medium-term resistance. So we're gonna have to see how this holds. But lastly, let's look at the pound here real quick. Looks like the pound's settling in, perhaps a short-term bottom at 154. Now there was no news from the UK that would have sent the markets in either direction. So you know, it's just sort of this could be what we call a technical bounce happening. And if we take a look here on the 2-hour chart, you can see it just sort of settling in and sitting right there. Lastly, I just want to touch on Australia real quick. They've got their elections over there, which appear to be locked in a dead heat. No one's sure who's going to win. The votes are still pouring in, so we're going to have to see how that plays out. But this is sort of similar to you know, what happened in the UK with the idea of hung parliament. So we're going to see you know, what happens down under fairly soon. So we've got risk taking happening today. Okay, it looks like the extend and pretend may be coming to an end here in the U.S. Sorry for the rhymes. As this U.S. stimulus plan, you know, is pretty much finished. Okay, now the economic data is pouring in, and we're seeing that private demand is very weak. And now, you know, this is probably a function of two things. Namely, one, that anytime you get major government expenditures, it tends to crowd out private business. You know, people are content. All right, let's just you know, let the government pay the bill for a while, and you know, provide money for economic activity. But once that stops, now business is sort of sitting around and going, well, you know, hey, we're content actually to drive profits by, you know, reducing the size of our business and not expanding. And what that does is that causes further unemployment. And we see, you know, unemployment levels here are still very high. I believe most recent reading was about 9.5%. So if people aren't employed, that means they don't have money to spend. That means that, you know, that consumer spending is roughly, you know, 2/3 of the U.S. economy. So if consumers aren't spending, that's going to cause business activity to decline, which is going to cause a decline in GDP, which is going to help us continue spiral down. Now, you know, adding fuel to this fire is the current policies that we have here in the U.S. regarding business. Got a very anti-business climate going on right now. People are angry. I don't blame them. But when there's uncertainty over future tax policy, what this healthcare program means, what kind of financial regulations are out there, people are just content to sit back and say, hey, you know what? we're gonna drive profits and try and drive shareholder equity by cutting costs and not by hiring people and expanding. So it's unfortunate right now. So you would think that people in Washington would catch on to this and say, hey, wait a second, we need the business community to really step up here. We're assuming they're going to do that, right? Well, unfortunately not. What we hear about is, well, now we need more stimulus and we need more quantitative easing. So it's going to be interesting to see what the U.S. government does here if it looks like we're heading back towards the old double dip. Now, meanwhile, we've got Japanese intervention going on the table. That's going to be an interesting battle. If the Japanese intervene and the U.S. provides further quantitative easing, which is going to be the weaker currency. So that's one to watch going forward. And I'm looking at today's probably going to be a little bit of a light day here. Not much more news on the docket to move the market, so I'm just going to try and do a little bit of short-term trading. So that's what I've got today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.